Monday, September 11th, 9/11. And we start out with the stock market indexes. This is market analysis, Stan Ehrlich. We start out with the indexes, the S&P 500 always. And the main story here is the apparent head and shoulder top formation that started forming back on June 16th or the day before, right on 15/16. That's the first shoulder high on the spider, and the same date or very, very close for the other indexes. Now, the head of the formation does contain a bearish engulfing ER sell signal at the highest high. And man, we caught the bottom of the market on October 13th with a buy signal also. So this is potentially a very good formation, and so far it has been. We've dropped down from that overbought condition in a resistance area all the way from 460, let's call it, to the low between the shoulder and the head, and that was on August 18th, and that was approximately 433 from 60. Got oversold. We have been bouncing, and the timing for the last high and the price level were talked about in advance, and we closed almost the complete gap, but not quite getting up to 455.5. And that rally high was September, this month, 1st. So we've come down for a couple more days, and last Thursday we have a low. Friday we get a little rally, and today we get a little bit more rally. So far we're up 2 points in 11, and we're coming back up. Not a new high for the day so far. We opened higher, gapped up, came down, and now it's time to look at the 1-minute chart real quick. So are we jeopardizing the last shoulder? Not so far, in my opinion. This is the low on Thursday morning, and that was around 442.70.80. And it started to come back a little, closing relative to the range of the day pretty good, but still lower. But then we have a bit more of a rally, and now we have a gap up, got overbought on the opening, came down, closed the opening gap, typical situation, very much so. And today we actually have, and this is a significant thing to watch at the moment, we have had this morning a head and shoulder bottom in the last couple of hours. The first shoulder was at 7:14 California time, then a rally, then the lowest low was at 8:04. So let's call it an hour, a little bit less. And about an hour later, or a little less, you have the last shoulder at 8:44 this morning. So you draw a line across the highest highs between the shoulders and the head, and you get the neckline. When we approached the neckline, which was about an hour or so ago at 9:10 California time, 9:54 right now, we broke the neckline in a classic fashion, popped through it, came back down and touched the neckline, classic test of the neckline, and then started to make new highs. Nothing wrong with the way this is acting. It's just a very small, short-term, obvious, a few hours formation. Now, at the moment, there's a little jeopardy involved. We're dipping back down in the last 2 minutes. But as long as we stay above the neckline and then come back again, I would think before the end of the day, we have a minimum upside objective that's not that big a deal anyway. 448.5. Not a new high for the day, but came very close to making one. And guess what? Today's high actually starts to close a very small gap from just a few days ago. So last week, we gapped down from the September 5th to September 6th dates early last week. And today's high closes approximately half of that gap. Gaps are almost always closed. I always use the word almost. And it's true. You're seeing it happen today. And many times in the 250 or so YouTubes I've made, last year and a fraction. So is that it? This rally this morning? Are we finished? Or do we get one more chance to finish closing the gap today? I can't tell. That's good enough, probably. What I want to see is within today or tomorrow to start getting below today's low at 446.5, stay there and continue to go down. I think that shoulder high is just perfect on September 1st in a almost gap closure area. We did the same thing this morning. So let's see if we can start to sell off the 1 minute chart. I know I spent 7.5 minutes talking about the spider here. The 1 minute chart, daily chart, has nothing wrong with this rally at that level. The timing looks good. The formation looks good. You're now the equivalent of something like that. If you're going to the left of the head of the formation relative to the right, which is present. Okay. The other indexes. DIA, same story. Nothing wrong with this little rally. A gap was closed on Friday. We're just following through a little bit more today, and we're not really jeopardizing that last shoulder high, in my opinion. In fact, I'll talk about this probably tomorrow if we start going right back down again, but it's kind of weird. All right, maybe you noticed it, but the QQQs, same situation, no change of opinion, still looks like it is forming or formed last week, that last shoulder high. I just got to start to see some weakness real quick. No high higher than last week's high, especially on a closing basis, is expected and could damage the whole thing and turn me back to at least neutral, if not bullish again right away. Also, please remember, we're coming into October next month. The October lows are likely to the degree of, I'm going to say cautiously, 85% in the last 30 years. We have had a buying opportunity of some significance in October. Not as profound and incredibly perfect as last year. That's the best one I think I can recall in my 52 years in the business. So next chart, DIA. I didn't want that at one of the Qs. I already talked about it. So it's going to be the Russell. Now we have essentially the same thing here, but the Russell's rally essentially today only, not on Friday at all, like the others, is extremely feeble and doesn't even appear to be much of a rally to begin with. This could easily break out of the neckline real quick in the next day or two if things started to get, heavy and make new lows. That would not shock me at all. Remember, when we cross the neckline, it's supposed to be on high volume, and it may be with a gap. So we'll see how that happens, and I think it's going to be this week. Next chart. I'm finished with the indexes. Let's go to futures. And we start out with the E-mini, which of course is the same thing, but I just wanted you to see the equivalent picture. The minimum downside objective, by the way, in almost everything here is except for the Russell, is approximately a 50% retracement of the October 13th lows to the highs we saw just a month or so ago. So it's a Fibonacci percent retracement approximately, or may end up being right on the money. We'll look into that when we get closer and closer, assuming we will. Next chart is NASDAQ. On purpose, again, I didn't draw the lines in, so you can see, I hope, mental imagination, last shoulder, right there, head of the formation, maybe both highs or one of them, doesn't really matter much. And the first shoulder right there, neckline slightly downward slanted. So it would be approximately this price level at the moment, 14,661. And that's how far down we got to go, and maybe a hair lower if it takes a few days to get to that slightly downward slanted neckline. Good. All right. So that's the NASDAQ futures. We have a head and shoulder bottom, I thought, and I still think there's a chance in the bond market, but it doesn't agree with my bearish expectation in indexes. As a result, if bonds go up, that tends to indicate that the interest rates are going to stabilize and or go down. So the stock market likes that and would start going up. And I don't think that's going to happen. So this week, we're probably going to resolve this question mark as to whether bonds are going to fail on this possible head and shoulder bottom, because the last shoulder is trying to form desperately. I'm actually going to move this arch mark designated a shoulder over 1 day. That looks better at the moment. So the pattern's still there. Next chart, 10-year notes, same story. And I could move that little arch mark over to the right too. There we go. So I don't think that pattern is dead yet, but all it has to do is start to go below today's low and or late last week's lows, Wednesday, Thursday, and close down there. And that would start to do damage to this and cause people to believe that rates are going to be stable to higher on the average than expected at the moment in the near future. Next chart is crude oil. Hey, overbought for a week. Now today we challenged the previous highs a few days ago and no follow through to the upside yet. Overbought conditions tend to produce a downside correction pretty quickly. And it's exactly what I'm looking for. And I've said I am expecting. I ain't got it yet. I look for a downside correction to 83.33-ish, that support level, the little red zone here. And maybe it could go lower than that if it won't hold very well. But this trend has changed up. You've got new highs on a multiple day basis for many months, approaching a year, and it stayed there. Getting overbought would be kind of normal. Let's see what it does when it comes back to support. It should turn around and go back up again and keep going up. So I am bullish, but I'm looking for a correction at the moment. Next, heating oil, overbought. Third time the charm? I don't know, but I'm expecting it to come down. Every time I said that when it was overbought, it only lasted 3 or 4 days, or 2 or 3, which I got, but it didn't, nothing else developed. So I'm now expecting the same thing, a few days down, but it depends upon how it holds at the support levels. Same kind of comment from the previous chart. Natural gas. We did test support last week. It did start to rally on Thursday and Friday, and it is now a little bit higher again today. I didn't get any fabulous signals. It looks like we may have had a bullish engulfing barely on Thursday of last week. Not that big a deal, but we were not oversold, so I didn't get a bullish green bar like we did way back February 22 of this year. That was a good one. So I am mildly friendly, expecting it to come up and close that gap from a week ago. Not that much of a rally. Maybe it'll go right back up to where it's done, topped out 3 times before since May. Next, gold, silver, platinum, and copper. Gold, we bought the low, green bar, sold the high, red bar, had a buy signal a little too premature, nothing in there, bought the first low on a double bottom, sold the high of the rally, bought that low right there, bought that low right there. We've had some fantastic signals in precious metals for the last year plus. So I am friendly. This support area looks like it's holding okay. It's not a big deal. The big deal is the bullish engulfing green. And that was, of course, August 21. It's already worked past tense. Whether you still have a long position or not, well, that's up to you. But we did guide you in the right direction on the day it turned. All right. If it starts making lows lower than today's lows, we probably are going to come back down and test that bullish engulfing buy signal at 1915. But I think it's going to hold and start to make new highs for the last month or so soon. Next, silver. Sold a rally high a day or two after the top. Got almost exact low. Did get the highest high. We did get the lowest low. We did get both highs and a double top. We did get the low back there. Okay. So support has been tested. We never got quite oversold, came close to it, and it's coming up a little bit today. It doesn't mean too much to me. Frankly, I think it still stands a decent chance of coming into the red zone here, 2270 or a little lower in this week. I'm not expecting any sharp rally. It just went down pretty damn good pretty quickly, and I was loving that since our last sell signal. Okay, next chart. Platinum. Sold the high, bought the low, sold that high. Silver and gold a little bit better, especially silver. So what do we got? Oversold condition in a support area. And today we're starting to rally a little bit. It's only the second day we've been oversold, so pretty much on time. Today's low is not even lower than Friday's low in a support area, both of them. Today's low and Friday's low. Well, I like what I see. This could be turning up. Not surprised. Oversold condition support. Maybe we're going to rally up and close that gap right now. Straight back up to 96.80 or 968. I meant. Next chart. Copper. Almost a bullish engulfing, but not oversold. So this rally today is pretty good. It's covering 2 previous days with the complete ranges and hanging in there. It's not flopping back down again, for example. The last signal we got was a buy signal, and we came down and tested it essentially. I like this. I'm turning at least neutral for the moment. I'm sure I was talking about coming down to test support, but that's now looking like it's not going to happen. And I'm going to wait for a day or two to see what I get out of this rally. Next chart. Soybeans are bouncing a little. This is a long-term story because we have made higher highs on a closing basis for a couple of weeks than the last few years. Major previous important tops were exceeded on the way up. We got a great sell signal almost at the exact top day. It worked very well, came back into support, which caused the market to bottom out in an oversold condition, kind of one of my favorite combinations. And we got a little buy signal in the middle there, but we went up and got overbought. So that has now been corrected. RSI is in the middle of 53. Anything below 60 and above 40 doesn't mean much to me one way or the other, very neutral. And we could be ready to start to push into new high ground, which would be very, very bullish. Climate change, anybody mention that? Next, bean oil. Kind of the same commentary. Support, I looked for it to be tested, but it may not, although that's not out of the question yet. So I'm still looking for probably a little bit more downside follow through, but we're coming very close to oversold. So we just might be in support and oversold at the same time in a day or two. That would cause me to be a little aggressive on the upside, but there's another story here. You have a double top formation. There was a high on July 24th and a bearish engulfing ER sell signal at the top of the second rally, August 21. That has worked great, and we've now gotten lower lows since that last bearish engulfing sell signal. Okay, we haven't tested support quite yet. We're not oversold quite yet, although damn close. So I'm expecting a test of support, then a little bit of a bounce, and then probably dropping off even more. But it's important as to how it acts when it gets back to approximately 58.60 next chart. Soybean meal. Resistance stopped the rally, kind of like a double top, but not quite exactly the same, and got overbought at the same time. So we've had our correction. A little bounce like this doesn't mean too much to me. We didn't even get close to oversold. I think this will peter out real quick, and we'll start to make lows lower than last Friday. Soon, this week. Next chart. Corn. Well, you're going to see wheat in a moment, and I think corn's about to do exactly what wheat is doing or did, and that's to chew away at new lows again and again, not particularly quickly. But one comment, when it gets below this red zone here at 470, that could cause a very big break very fast, because it'll be a new lows for a long period of time. Okay. Wheat has challenged previous lows for quite a while, not that long a period, but same kind of picture. Did bounce off slightly for 2 days, and now in the last 2 weeks, slightly lower lows, rally to resistance, lower lows again today, probably another new low close. Slow bear market grind to the downside. Don't have a downside objective at the moment. Next chart. Cattle. Trouble figuring this out. Obviously, we're up near previous highs, and obviously we're close to being overbought. So that implies that it's going to turn back down a little bit, but that's very small. It may even only come back to 187. I'm not going to say much here. I think it's about to turn back down, especially if it can jump up a little bit more, double top out in overbought conditions. Then I'd be a lot more aggressive about saying down. But if it slowly goes up, different story. Next, hogs. No comment on Miss Piggy. Next, OJ. I can't believe this market. It just keeps going. It won't quit. Whatever happens to orange juice, I don't know. So new historic high here and not even overbought. Now I realize there's some divergences developing, new high in price, but not a new high in the indicator. But I don't see any reversals yet. I don't see any significant failures yet, and I don't see any reason to go short yet. But boy, oh boy, it's very tempting. Next chart. Cocoa. Double top potentially forming. Came down a little bit, but Friday it went up slightly, and today a little slightly again, but doesn't change anything yet. So if it makes a closing price above 3,698, then it's a different story. Otherwise, I'm waiting. Frankly, expecting it to go down, but my confidence level is not very high. Next, bullish engulfing today at the previous low, which was a bullish engulfing ER buy signal on August 18th. We have a turnaround here. The only thing not causing this to turn green was the fact that RSI only got down to 2689. If it had touched 25 or lower, I would have a green bullish engulfing ER buy signal right in front of my eyes. Again, at the same price level as a few weeks ago. And screaming bloody murder double bottom. I can still tell you this looks very much like a double bottom, but I just don't have that second buy signal. It's so close. So I'll say double bottom. Breakout to the upside is going to be above 158, call it. Minimum upside objective, I can just eyeball it, would be about 168, the previous rally high here, in a longer-term bear trend. Well, I'm turning short-term friendly. I wouldn't quite call it super bullish, but decent rally. My two objectives would be at best 168 and a kind of a minimum 157. Next chart. Sugar. Overbought conditions pulled it back down. Oh, not much. And in fact, it is basically holding at those previous triple top highs. So this is looking pretty bullish. I'm thinking this thing could pop into new high ground this week. Next chart is cotton, the rag. I gotta say that passed the test pretty good in support area. Never even came down to where I thought it was going to get to, 83.50. I did see it dropping for a few days, which it did, and now not what I expected. That's too strong, too quick. I think it has a chance of blowing through the top here, getting up to 90 plus, and that would turn me obviously bullish. Trend would be up. I just missed a turn a couple days ago, so I'm going to be a little neutralish at the moment. We get back to the mini. You guys have a great day. Thanks. Mañana.